$550. Closing capital. A sole trader's business made a profit of $65,000 during the year ended 31 March 20x7. This figure was after deducting $200 per week wages for himself. In addition, he put his home telephone bill through the business books, amounting to $800 plus sales tax at 15%. He is registered for sales tax and therefore has charged only the net amount to his statement of profit or loss and other comprehensive income. His capital at 1 April 20x6 was $13,000. What was his capital at 31 March 20x7? Answer. Capital at 1 April 20x6, $13,000. Add. Profit after drawings, $65,000. Less sales tax element, 800 times 16% minus $128. Capital at 31 March 20x7, $77,872.